All right. I want to welcome everyone for joining us today. We have some really interesting information that Joe's going to speak on how to invest in the coming crypto and digital economy tax-free. So just a quick disclaimer, Camel Plan does not endorse any speakers, does not give any investment, tax, or legal advice. You should consult with your accountants, attorneys, and other professionals before making any investment. This is my contact information. If you have any questions regarding using a self-directed IRA or solo 401k, I can be reached at my email address at rfischer, Fisher's with a C, RFISCHER, or our toll-free number at 866-559-4430. I'll let Joe tell us a little bit about himself, and then you can go ahead and take the screen, Joe, when you're ready.
Okay.
So thanks for being with us today, too. And I did want to add one more thing there. I want to remind everybody that there is a chat box. Feel free to ask your questions, and we can either, depending on the question, Joe can answer it through it, or we'll just answer them all at the end. So just put all your questions in there. Go ahead, Joe. Thanks for being with us, Joe.
I appreciate having me on today. Again, my name is Joe Robert. I'm currently the CEO of Robert Ventures. I've been investing in alternative assets for the last 20 years, primarily of real estate. It has consisted of over 200 properties and 165 million of residential mortgage loans. In the last 4.5 years, I've had the opportunity to start investing in crypto while I reside in Puerto Rico for over 4 years. And, I kind of went down the rabbit hole, and the excitement and everything in the space brought me to where I am today, where we're managing a portfolio of crypto and we have investments in multiple funds. My co-host, Bill Guida, was supposed to make it here today. Unfortunately, his wife went into labor this morning and is not going to make it, but he heads up research on the team. So I'll take it and start from there. Okay, so we're going to go into how to invest in the coming crypto and digital economy tax-free. Again, my name is Joe Robert. I have to start with the disclaimer too, and that is presentations are intended for educational purposes only and do not replace independent professional judgment and may not reflect today's facts. Statement of facts and opinions expressed are those of the presenters individually. Unless expressly stated to the contrary, they are not the opinion or position of the trust custodian, Robert Ventures, or its employees or contractors. The trust custodian, Robert Ventures, and the presenters do not endorse or approve and assume no liability for the content, accuracy, or completeness of the information presented. Attendees should note that this session may be audio and video recorded and may be published in various media, including print, audio, and video formats without further notice. Again, as Ryan mentioned, in no way is the trust custodian promoting our companies or our offerings. And last, hold all questions until the end, where we'll have open Q&A. As I already mentioned, I've been investing in real estate for over 20 years and invested in over 200 properties. Over the last decade, I've also managed a note fund, multiple partnerships, and been an active angel investor here in the North Carolina area. For the last 4.5 years, we've been managing a portfolio of liquid crypto and invested in multiple notable venture funds as a limited partner. And probably my favorite, obviously, why I'm on the call today, is I've utilized my IRA to invest in all these assets over the last 10 years. So just to run through some basic terminology, kind of what is blockchain technology? It's a simple permissionless software designed so that multiple participants can validate transactions to prevent fraud. Once these transactions are verified in a block, the information is recorded and immutable. So in the picture on the left, we have a traditional database where one party can put that information in and change it at any time. On the right, we have a blockchain network where there's multiple participants that validate each transaction to prevent that fraud. So what is cryptocurrency? Crypto is a digital asset created by code and secured by the blockchain. These blockchains are built with predetermined governance models, and that's what makes them different. They're intended to become a medium of exchange without any third-party intermediaries. And last, digital currency is secured by cryptography. I'm sure you all have heard a lot about Bitcoin because it's been in the news over the years. Bitcoin is the most decentralized asset powered by the largest blockchain network. Currently, globally, you could send payments across the whole globe and instantly settle. It's considered a scarce asset with only 18 million in circulation with a 21 million total supply. Over the past few years, banks, hedge funds, and institutions have implemented Bitcoin into their investment thesis. Most recently, over the last year or so, we've seen MassMutual, Tesla, and Square add Bitcoin to their balance sheet. So on the right here, this is a picture of Mark Andreessen. He's a venture capitalist in California who's a partner at A16Z that manage billions of dollars. And he was quoted over 10 years ago how software is eating the world. And so we look at blockchain as the next evolution, where it's coming in to start first, eating finance and gaming and going to other areas. And you might hear about buzzword called Web3. And so if we back up and look at what was Web 1, Web 1 was where people consumed the content on the internet. This one might be at message boards or personal websites. Web 2 is where they created content on the internet, such as social networks and blogs, and you're probably most familiar with is like Facebook. Web 3 is where you'll have the ability to own the content and also get paid directly from your users and have control of that. On the left, we have Web 2 companies such as Google, JP Morgan, and Spotify. And on the right, we have Web 3 companies such as Brave, Aave, and Audius. Brave browser on the right allows you to opt into what data you provide. And if you would like to see ads, you could actually get paid by the BAT token. Aave is a borrowing and lending protocol that's meant where you could go and deploy your crypto assets and start getting yield right away without having to go sign up with an institution like JP Morgan. And typically those yields are also higher than placing with JP Morgan. Last, we have Audius. It allows the creators to be able to sell the content directly to the user or that consumer without having to go through a centralized party like Spotify. Obviously, Joe Rogan was in the news in the last few months, and Spotify had the ability to be able to take down their episodes and censor what he was posting. So for some performance aspects, what we see in the Bitcoin market, over the last 7 years, Bitcoin has outperformed all other asset classes, including the high tech stocks, bonds, gold, and the S&P. As you can see, $1,000 invested about in 2014 is about $100,000 today. And that's about a 10x over what Amazon has done. And so you can have an understanding that these are asymmetric upside returns that are possible in this market. A lot of people try to start with a small allocation to the crypto space. And so the FTSE Russell put this together, demonstrating what a portfolio with a Russell 1000 index would look like with a 2.5 or 5% exposure to Bitcoin. And as you see up and to the right in brown, this shows you that a 5% exposure to Bitcoin outperformed the regular indexes. So what is happening in the market and where are we? In 2018, the market peaked out at about 800 billion. This was a time where a lot of projects were raising a lot of capital. And then what we seen was a consolidation phase for 2 years where investors had the opportunity to acquire these tokens, but also the projects to build their product. And then now we moved into the current cycle for the last year and a half, and we topped out about 3 trillion. And we see this point as a consolidation phase. And ultimately, 5 years out, we believe today's peak at 3 trillion will look like 2018, where we'll be multiples higher. So crypto users are outpacing internet adoption. This chart shows how on the left where we are, and in a time frame, crypto users are outpacing in numbers versus internet. So we're growing at a faster pace than what we saw before. And what they're projecting right now is that we're seeing 80% average yearly growth and slower down towards the end of the decade. The same growth that we're seeing from users, we're seeing across most hedge funds and the performance of assets. And if we look at it, there seems to be a common theme that this will be about 10x more users again from where we are today. Another chart from Grandview Research shows that equity in blockchain companies is supposed to grow at an annual rate of at least 80% from 21 to 28, reaching above $1 trillion. And I think we're actually on pace to outperform that. So when it comes to the 4 areas of investment that you're going to hear about the most, typically you're going to hear about store of value, open finance, or what's maybe known as DeFi, blockchain infrastructure, and then we have the metaverse or NFTs. So what is store of value? Store of value is a combination of easy monetary policy and the constant rise of the money supply by central banks in recent years that has reduced citizens' purchasing power. Investors are currently looking for vehicles that can both store value or outperform inflation rates. Obviously, inflation has been in the news like crazy, and so everyone's trying to just outpace inflation rates. Bitcoin has a finite supply, which gives it a competitive edge, especially in the hyperinflation scenarios. So these 2 charts show the federal data. The top one shows the M1 money supply, and you can kind of see from the 2020 what the Fed did, how we have expanded in multiples. And then on the bottom, over the last 80 years, you can see how the purchasing power of the consumer dollar has been on a continuous decline. So what are some ways that you can have access to a digital store of value? Here's 3 things that we broke down. And the first one is stablecoin. Stablecoin is basically a crypto asset that is pegged to the dollar. So 1 USDC equals 1 US dollar. And these products give you the ability to earn interest rates from around 8 to 10% from providers such as Celsius Network, BlockFi, and Nexo. They allow you to lend your stable coins for this high interest. In the middle, we have privacy coins. These are used to enhance encryption and to mask the user's identity and keep both parties anonymous. These projects are available on exchanges such as Binance. And last, we have the king daddy of them all, Bitcoin, and people are considering that a pure store of value, maybe a gold replacement in the digital sense. It is available to buy on Coinbase, PayPal, Venmo, and many other sites. So we roll into the next topic, and that's open finance or DeFi. DeFi, has emerged a lot in the last year and a half. And so what is it? These are open finance networks that are connecting peer-to-peer financial services. This gives access to everyone worldwide. Maybe in the US, we are so accustomed to having these services, but there's areas of the world where this is not easy to access. So on the left side, we see that the traditional financial system, if you're going to send money to somebody else, that typically it's going to take it from your bank account. It's going to go through an intermediary and then go into that other person's bank account for that receiver to access it. On the bottom, a decentralized financial system allows you to send it directly to the receiver through that network without those intermediaries. So one great example would be that right now, for some of you to send a wire, you might have to log into your bank account, put in all that receiver's information, and then send it. It may take a few hours or so for them to approve it, or a day. For others, you might have to go into the physical branch and set up that wire. Well, right now, from your crypto wallet, you could send pretty much any amount of money you want across the world to anybody instantly. On the right shows a chart of how many assets are currently locked up in DeFi. We're ranging around 225, 250 billion currently. These are all assets that are being utilized to stake, earn, and lend. So blockchain infrastructure. These are projects where the underlying software infrastructure on a where decentralized applications are built, considerably similar to Mac OS or Windows. Each project has their own unique tokens and governance mechanisms. Ethereum is the most widely known and is the most actively developed. This project has first mover advantage as it was the first smart contract platform of its kind and was launched in 2015. To give you an idea of how well it has performed, it saw those that had the ability to get in at 31 cents and then recently just had a high of $4,500 could have made about a 14,000x multiple on their investment. Now, typically this doesn't obviously happen on every investment, but this is an indication of what you can see in this marketplace over a 5 or 10 year period of time. On the bottom, we have other blockchains, including Harmony, Avalanche, Binance Smart Chain, Solana, and Polkadot, all ranging from around 2 billion to 65 billion, and they all do something a little bit different or serve different niches. Metaverse, another buzzword that's been going around lately. We believe that everything you experience in the real world today will be replicated into the metaverse virtual world. So it's all about being here at the right time and right place. Here's a quote from Reuters that basically a virtual real estate plot sold for close to $1 million. And I was kind of, it was kind of interesting when I first heard that. You wouldn't believe that because you were used to physical real estate that you could feel and touch. But we are seeing 6- and 7-figure sales in the metaverse of these land plots. On the left, we have Walmart virtual shopping, where you may be able to have the ability from your home to be able to, join the metaverse and be able to go up and down the aisles and see different brands and be able to understand what the, dynamics are and be able to put it into your shopping cart and most likely have that delivered the same day. On the right, we have what might be a boardroom or a business meeting where you could join in the metaverse and participate in the activities. So some other examples on the left is Mark Zuckerberg in another work meeting with his team, another virtual reality aspect. On the right, we have augmented reality with live workout lessons. Here, this is the sandbox, and this is one of the first games called the Hermit Crab Game Studio. It's a little quick 30-second teaser. It'll just give you an idea. We are, still in the early innings of all this. So what you see is not going to be the product you're going to see in 10 years. So there's many game studios now coming to market, building out a lot of different games. I mean, there's billions and billions of dollars being currently raised and deployed in the space. So NFT, a lot of people have seen NFTs maybe flying around their social feeds lately. What is an NFT and how do I view that? NFT is a digital verification of ownership and data. So on the left side, we had a Bored Ape, and this is considered a collectible or digital art. Then you might have what is known as membership or access to certain groups. Maybe it's a mastermind, maybe it's a restaurant. Here is shown the Fly Fish Club that Gary Vee helped launch. Next, we have where we mentioned the creator to user owned economy and digital music, where the creator can create that and sell it directly to their users, to their fans, without those intermediaries that are taking, whether that's 20 to 50% of the revenue. Last, we have certificate of authenticity. This could be a house title, a boat title, a car title, whatever it is, a digital verification of ownership. So when it comes to NFTs and the concept of exclusive membership, one place you can start to look is OpenSea. This is probably the biggest marketplace out there for NFTs. And also you could go to LooksRare. Some main communities that have been around the last year are Bored Ape Yacht Club and CryptoPunks. Some of the celebrities that currently are involved and own these assets are Justin Bieber, Jay-Z, Snoop Dogg, Serena Williams. Snoop Dogg's actually been very involved in the metaverse, is building out a lot of different assets. On the bottom, we have 3 NFTs. These are Bored Apes, and you can see their price. That's priced in Ethereum. So when you see 103 Ethereum, basically that means you got to pay 103 Ethereum, and Ethereum's priced at about $3,000 today. So each one of these are going to run about $300,000. So when it comes to getting started in buying your crypto, you want to probably go to a US regulated exchange first, because you need a fiat on-ramp where you'll utilize your cash from your bank account. You'll set up an account at one of these exchanges, and this will allow you to access crypto. And so on the left, we have Kraken, then Gemini, FTX, and last we have Coinbase. Coinbase is one of the most popular apps we've seen in the App Store, and also ran the Super Bowl commercial with the QR code. After you set up an account here and purchase your first crypto, you might start with USDC or Ethereum. And then from there, you could go to a Google Chrome extension called MetaMask, and you could download the extension and you'll get a wallet address. From the exchange, you would send some crypto to that wallet address. And then now you could participate in these different protocols. And so number 3, you are connecting your wallet to Aave. Aave is that borrowing and lending protocol where you can start getting yield on your assets. So on number 4, you could see where we deposit the ETH or USDC and you start getting yield right away. Coindex is a platform that monitors best vaults on DeFi, so you can compare protocol yields with API at risk. So it's a great website if you want to go and just try to find the best yields for certain type of assets you might own in your wallet. If you want to get started on buying NFTs or joining digital communities, you could go to OpenSea, look for a collection that you may like, connect with your MetaMask, and then last, when you see something you want to purchase, you can buy or place a bid on that digital art piece. For all the real estate investors or those interested in virtual real estate, here's how you could do that. Again, it starts with your MetaMask wallet and OpenSea, and you connect, and then you'll be able to see all the plots that are available for sale and their price. So in the middle, you could see you could buy this plot of land for 3.85 Ethereum. So if Ethereum is running about $3,000, it's somewhere in the $10,000, $11,000, $12,000 range for that one plot of land. Last, you would confirm that payment with your MetaMask wallet. So when it comes to due diligence in crypto investing, we're breaking down 4 different areas, and that is the team, on-chain analytics, fundamentals, and then last, the community. So what we look for in teams, we like the founders to be identifiable. That means visible in the public, available to get on a Zoom call, and not anonymous. We like founders that can show their proof of work via previous engagements or work examples from other companies that they worked at before. We like founders that have prestigious conventional experience and also have a proven track record to execute a vision and a roadmap. Last, one of the most important things is that crypto is constantly evolving. So we need to find founders that are willing to pivot, adapt, and evolve. This ultimately will allow them to emerge victoriously. So this is a picture that always flies around Twitter on the bottom right, but this is Sam Bankman-Fried. He's in his young 30s and he's a multi-billionaire already. He's the founder of FTX, one of the biggest exchanges globally. And you can see his commitment to building the project and the company. He's sleeping on the floor for nights on end. And you typically don't see this in, the corporate world. So the young people that come into the space bring a lot of energy, and that also helps with the excitement. So on-chain analytics. So the key feature of blockchain is its transparency and mutability. Every previous transaction is recorded on blockchain and is 100% free for the public to access. So in this example, we show a block explorer that you can find at etherscan.io. And this is providing data on an asset called a ribbon. So number 1, the picture shows the asset ribbon along with its price, its fully diluted market cap, max total supply, and then holders, that is the number of wallets, and then the number of times transfers had occurred. As we move down to number 2, you can see it's listing the top 1,000 holders, and it'll show the address, which is the wallet, the number of tokens that wallet owns, and then the percentage of the supply that wallet's holding, and then that value on that day. Last, number 3, we'll see a ledger. This is going to show the total transactions that have occurred with a transaction hash, the time it occurred, and then the from wallet and the to wallet, along with how many tokens were transferred. When it comes to investors and token holders, since crypto assets are liquid, investors' reputation is more important than ever. This is because any prior investors can sell at any moment, unlike early stage investments in traditional tech companies. So what are some signs we like to look for? We like to look at the previous fundraising valuations and token lockup schedule. We like to see transparency from the projects regarding private round raises and OTC deals, or in other words, over the counter. We also like to see the historical track record of the existing investors. This gives us insights into those investors that typically will help deals move along and hold their tokens for a longer period of time. Some sources we find this information you can go to are Crunchbase and Dub Metrics. These are two places where you can find early stage funding metrics. Next, we move to the Discord and Twitter accounts of those projects. You can sometimes access the team and ask questions there. Next, we have the project's website, which usually has a white paper. What is a white paper? White paper is basically like a business plan. It's going to outline what they're trying to execute and also have token information on that. Last, like you've seen on the previous slide, we have the Block Explorer. You could go here to check transactions directly on the blockchain. Maybe you want to see how distributed the tokens are, how many different wallets, or if there's any whales that are holding a lot of tokens. So understanding the fundamentals, and contrary to popular belief, a significant amount of crypto assets have real use cases. Sometimes they are revenue generating and they can be analyzed from a fundamental perspective. There's no one source of truth, meaning there's not really like a Bloomberg terminal. They could go and get all the information about a certain project to make a decision. We have to go through many different sources, and this may include the project's website, Discord, governance forum, and other social platforms. Some things we like to look at are the price of the token. We don't like to see a sub penny per se token price or a 5 or 6 digit. There is some methodology to pricing the token that gets other investors excited. Next, market cap. This may help you in making that decision if this project is overvalued or undervalued compared to its peers. When it comes to free float or fully diluted valuation, this will give you an idea of how many tokens are already existing in the marketplace and what the total supply is. So this will tell you that are more tokens coming onto the market in the future and maybe when. Wallet distribution will show you how many different wallets are on the network and how many tokens are in each one. Next, we have the inflation or deflationary structure. Is there a burn or a buyback feature? Something that is going to help increase the price of that token in the future. Last, as mentioned, a price to sales or a price to earnings ratio. A lot of protocols might be sharing transaction fees back to the token holders, and this can be analyzed just like maybe from an institutional standpoint. Two sources that you should probably take note is CoinGecko.com, CoinMarketCap.com. These are probably two of the most widely used sites over the years where you could get a lot of this different information. So how do we look at the community? Right now, there's over 18,000 monthly active developers in Web3, and this is growing fast. I mean, a lot of these companies have treasuries or a balance sheet, and they're poaching a lot of the Web2 companies. So a lot of people from these Googles or Facebooks or Amazons, they're moving over to Web3. We like to look at developer activity and how many developers are contributing to the code and how often. What incentives are there for developers to come and build? We have to make sure that these projects have a treasury that can last a few years and pay these developers to continue to develop their project. Social media. We like to measure the activity through their Twitter and Discord accounts. Understanding community sentiment. Are they discussing more price pump, or are they discussing building out a project and they're here for the long term? You can get that type of sentiment by diving into the Twitter and Discord accounts. You may also look at web traffic and Google searches to have an idea of how popular that project is or where people across the world are looking at it. Last, how frequently are they updating their community members with critical information? We like these projects to be constantly giving us updates on the roadmap, even if they're not executing their goals. One thing that has worked for us that we always advise, and I think with any type of investment, is always be as close to the source as possible. So what we have done is team interviews with these projects that are building. So 2 years ago, we interviewed these 4 projects. And if you would have made an investment at that time, you could see these are approximate numbers. You had approximately done about a 6 to 40x on your investment. So I think the takeaway here is when you're investing your capital, you want to be close to that project and have a great understanding of what is happening and what's on the roadmap to make the best decision possible. So regulatory framework coming soon. It is still catching up to the innovations in the crypto space. And as investors, we must be up to date with the developments to ensure that we make the best investment decisions. In this year alone, multiple jurisdictions have decided to ramp up their initiatives around crypto regulations. Joe Biden recently came out lately advising that all parts of the government need to come to a conclusion of the regulatory framework for the crypto industry this year. And we ultimately believe that when this is completed, there is a lot of money from the institutional side that is on the sidelines waiting to come in. And, so obviously getting some exposure now gets you ahead of that curve. I have a friend over at Mass Mutual, and we spoke to them directly, and they said they're basically just waiting for a regulatory framework in order to move forward. So you might want to take a note. These are some best practices. We've kind of learned over the years. These are some things that we actually implement ourselves when setting up your accounts or custodying your own crypto. And that may be never use a public email address to set up accounts for buying and storing crypto. And that may also include your financial accounts, your bank accounts. Try not to use the email that you give out to everybody else, as it becomes easier for people to try to phish you. 2, avoid cellular plans, because there's a thing what's known as SIM hacking. So always try to move to a 2-factor authentication, such as Google. And when possible, some of these exchanges allow you to use a YubiKey, which is an external hardware device, which we ultimately think is the best one out of those 3. Next, for storing your passwords and logins, always use an encrypted password manager for all these logins. When you purchase from exchanges, those exchanges can custody your assets, but you also in crypto have the ability to self-custody that. And with a ledger, that gives you the ability to do that. And so when you are utilizing a ledger or another wallet service such as MetaMask, you're typically going to get what's called a seed or a passphrase. And this is the backup in case you ever lose access to your assets. And you should never store these in a digital format. We don't recommend it. Last, most exchanges allow you to whitelist withdrawal addresses. And what that means is you could set certain addresses in order to withdraw from. So if anyone gains access to your account, there's a certain period they put an address in there that they have to wait till anybody can withdraw it. So it's always important to turn this feature on. So this way, if anyone gains access to the account, they can't withdraw your funds immediately. So when it comes to a full suite of financial products and services, companies like Celsius, BlockFi, Voyager, and Nexo are offering traditional like banking services that utilize these crypto assets. They have services available such as lending and borrowing, credit and debit cards, and savings and earn accounts. Now, most of these guys have somewhere between an 8 to 10% interest rates on their stable coins, and you can't find these in the banks right now. So they are quickly gathering, we'll call it assets under management, because there's a lot of people depositing to take advantage of these high interest rates that can't be found in the traditional banking system. So some questions that we get from other people typically is, what are some advantages of choosing to go with a fund or self-manage? And so we're just going to break those down. Funds typically have a knowledgeable industry experts. They utilize institutional custodians and exchanges. They also have community engagement, like those interviews with those projects, and they also have parties for limited partners. The teams have industry relationships and insights. They also maintain a diversified portfolio to mitigate volatility and increase performance. They have a fund administrator and tax lawyer that does the tax work and provides those annual K-1s. In this space, when you start opening up these different wallets everywhere and moving crypto around, you are responsible for that tax work and tracking all that. And typically you're going to need a third party, tax software to do that for you. And you'll be responsible, obviously, at the end of the year to do your own tax return. Last, it also gives you passive exposure and allows investors to focus on what they're best at and where they make money. So another question we get, why not just invest in Bitcoin? And so here's a research from Crypto Fund Research that basically shows the performance of funds versus Bitcoin. Now, back in the early days of Bitcoin definitely outperformed all other funds, as Bitcoin's around $1 trillion market cap. We don't think that performance is going to continue over the next 10 years. And so the exposure to these other smaller crypto assets with asymmetric upside we think will outperform. And as demonstrated here up and to the right in blue, you can see that the index is outperforming Bitcoin. This one's interesting, I think, because personally, I never really understood this until I got into this market, and that is volatility provides outsized returns. So if you look at Facebook, Google, or Apple, I'm pretty sure that most of us probably wouldn't mind investing on the day of the IPO based on the returns. You know, as you can see with Apple, $10,000 invested IPO is about $15 million today if you would have held. And if you look at the drawdowns on each one, we've seen drawdowns all the way down to about 86%. And so the conclusion is that short-term drawdowns are present in all emerging technologies and ultimately provide those outsized returns that people are looking for. And that's why we love the crypto market. So 2 different ways you can roll to get started with your IRA. You can use your IRA to set up a LLC and then have that custodian wire money to the LLC. You can set up accounts at exchanges to buy. You can also invest in most funds when you're qualified, and you can invest in startups directly. Obviously, Peter Thiel made the news, I think, in the last 6 months or so about how he had his multi-billion-dollar IRA account, and this was through private stock. On the right, you could use your existing trust account and start investing right into private placements directly and these private stock of these companies when you meet those investor qualifications. So a few things to wrap up here at a conclusion is that IRAs are the best tax vehicle for crypto investing. And why is this? This is because most income from the crypto industry is considered capital gains, and therefore participating with your retirement accounts allow you to participate in this tax-free area. Also, reports from all these different research firms show that we're at least seeing 10x minimum growth across this whole entire industry within the next 5 years out to 2030. We'll leave off also that for any of you that would like to subscribe, we have a weekly digital asset newsletter that goes out every week with different nuggets. Also, we have our podcast in there where we interview these projects. You go to robertventures.com, fill that out. If you would like to speak to us directly or set up a call, you could fill out the inquiry on our website, and we could also answer any questions you have. And we'll end it there. And then Ryan will just open up the floor for the Q&A.
Yeah, so feel free to enter your questions in the chat or the Q&A, and we will answer those questions for you. It looks like some people raised their hands here. I think I can allow them to talk. Hold on. We'll start with Cynthia and I'll allow her to talk. All right, Joe?
Yep.
Cynthia, we'll unmute you. Should be unmuted. Should ask to unmute. All right, well, let's try this one. Allow to talk.
Hello, can you hear me?
Yes, go ahead.
All right, so thank you for actually doing this presentation. My name's Asim Khan. I'm from Miami. I've been kind of looking into this. My question is this like a turnkey solution that here's the money, you guys are going to invest and just give me reports, or is something like coaching and tips and we'll guide you and you do it on your own?
Right now, the webinar is really just an educational standpoint, give you insights into everything. What we do outside of here is a little bit separate, and that, from the fund side, that's always something you can, book a call, like I mentioned, directly on our site. When it comes to educational assets, we're not doing anything like that. We're just doing this, for free, and we're going to take feedback that we get from this one and, improve it and provide whatever you guys would like on an ongoing basis if possible.
Okay, sweet. I mean, this was definitely very engaging and informational. I'm sorry, that's the word I was looking for, because obviously being in Miami, there's a lot of firms coming into downtown. They're leasing up millions of square feet. A lot of the city of Miami is actually trying to get it, or they've already started making payments and crypto. The mayor over here is pushing it really good. As far as I'm more into the commercial real estate side. I'm getting ready to launch a fund. So that's my investments and my kind of expertise that I'm trying to master at this point. But like, you know, I want to diversify, right? I want to put my eggs in different baskets. So this was one of the baskets I was interested in. I'm like, okay, this is it. I'm kind of a tech guy. I like gadgets, but there's just too much info out there. It's kind of overwhelming. Like, who do you listen to? NFTs, crypto. Oh my God. So I'm trying to
There's always
find
a lot
like,
of noise. There's always a lot of
yeah,
noise.
yes, exactly. I mean, one of my friends is he's really into crypto, but he's like he's got 20 acres down here in Florida and he's trying to do a crypto farm. So he wants to do like solar because you know power is what kills the crypto mining. If we have free power, the sun's powering our crypto farm, then I think he's got that market good to go. So I'm trying to figure out what's the best route to jump in this game. Like and as you said, the metaverse, the NFTs, and all these different opportunities out there. How to diversify in that? How to educate myself? So you guys do pretty much invest on our behalf. Like if I wanted to give you money, I'm like, all right, brother, here's like 10,000. Let's go get started. How would we approach that? Or do you even do that?
Yeah, I mean, we do that, and that's something we always like can discuss offline because the calls, you know,
Okay.
more around the educational. The best thing to do would be to fill out the thing on our robertventures.com, and you could book a call and speak with me directly. You know, me personally, you know, obviously we manage our own portfolio, but we also have investment into different funds, even though we're doing the same management. And the reason why is this crypto market, if you think about the stock market, there's thousands of public companies, right? And then there's many different sectors. So
Word.
it really becomes, like you said, it becomes a lot of noise and becomes hard to focus if you don't dive into a certain area. That's kind of like no different than the real estate, right? You could do residential, you could do apartments, you could do retail, you could do commercial mixed
Right.
use. So
Yes.
in the crypto market, as we broke down those 4 areas, there's like infrastructure, there's the metaverse, the NFTs, there's gaming, there's gambling, you know what I mean?
Wow. Okay. Yeah.
So
So
I,
I mean, I definitely love to do a little deeper dive. If you can like drop the link in your chat box, I'll copy it from there, and I'll just get off now. I think I'm taking enough of your time. I'll let some other questions being answered. Thank you guys. Appreciate it.
Thanks. Thanks for your question there. Joe, someone replied and said that your robertventures.com link, it's saying it's a non-working link, so you might want to look at that.
I don't know about that. I don't know. I'm on it right now. I dropped it in the chat right now just in case.
Okay. There's a few more questions here and we'll try to be brief and
Yeah.
keep everybody's time here. Can you explain more about the MetaMask and how you find the highest lending rates?
Okay. The easiest way to put this is that you're going to initially need a fiat on ramp. And what a fiat on ramp is basically taking your cash, your USD from like your bank account and getting it into we'll call it the crypto universe, right? So that's where you'll need to set up an account on Coinbase or one of those centralized exchanges. And then once you go from there, you can purchase USDC, which is a crypto asset that's backed 1 USDC to $1. Once you have that, you go, you could Google MetaMask Chrome extension and you can set up, it's a MetaMask Chrome extension. And when you set that up, you'll set up what's like a wallet. Think of it like a new bank account. It'll have a wallet number. And from there, you'll send your USDC at the centralized exchange to that MetaMask wallet. And the best way to do this is also maybe search YouTube, only go to ones that have videos that have been watched a lot. As I mentioned, there's probably a lot of people out there that kind of fish or put some bad information out there. Never give up your passphrase or seed phrase to anybody ever. Just take that note. A lot of people do that. Just never do that.
There was also a follow-up with that. Any pros and cons to the lending risk?
Yeah, that's a good one. Like everything in life, there's always risks. The easiest way to put that is I typically the lower the yield, the lower the risk, right? I mean, that's why you go into a bank account, you get FDIC insurance at $250,000 and they give you 10 basis points or whatever it may be. Probably like a protocol like Aave, who's already now been operating for a while, has billions and billions of dollars, would be, considered a lower risk. But you're going to find, maybe 3 to 5%. That's where some parties decide to go with some of these centralized yield providers, such as Celsius or BlockFi, where you could set up an account and then put it with them, and then they do the work for you, kind of like a bank, but they're paying you somewhere in the 8 to 10% range. When it comes to risk, everything is basically a smart contract. So think of it like everything is a software, and software comes with risks and it comes with bugs, and that there is always a risk of losing your funds. Now, the more time that goes on with all these different protocols, the lower that risk becomes.
Great. Thanks, Joe. Just a couple more here for you. I have a Coinbase account. There is an option to use their wallet. Can I connect that to OpenSea? I had a MetaMask wallet and it got hacked. And then the second question is to that. I'm interested in putting my photography on the NFT marketplace. Can I put my NFT on various marketplaces or just OpenSea? Can OpenSea put my NFT on other marketplaces also? I can read some of that back to you if you need to, or you can find it.
Let's at least hit the first one. The Coinbase wallet has becoming a lot more popular, and people are starting to utilize that more than MetaMask. So really, yes, you could go with either one. Coinbase has its own decentralized wallet. Don't confuse that with its app in the App Store for its centralized exchange. They're two different services. That's the first thing. So you can use the Coinbase wallet, and some are starting to prefer that over MetaMask. It kind of is your own personal preference. I just been using MetaMask over the years, and I haven't switched. And second, we have photography NFTs. Yes, you can apply to put your assets up on NFT or OpenSea, and you could also go to other different other marketplaces.
Great, thanks.
I'm definitely not the NFT.
Anything else I can help with?
Jesus.
All right, and then there's one more here. We won't take too much of your time here, Joe. I'm confused by what exactly you're buying with an NFT or virtual plot of land. If I buy physical land or property, then there's income such as rent, et cetera. For NFT and virtual plot of land, do you actually own anything physically? How does it make money?
Okay, there's a few things to unpack. So some of the stuff are the areas that not everyone's 100% sure on is how the taxes will work when it comes to rent and so forth on the NFTs. And I definitely would consult a tax professional on that. When I mention most, like I say, always, most income derived from the crypto market is a capital gain or tax-free. And that is because like the trading of these different assets or selling is typically going to be a capital gain play. And occasionally you might have a staking reward, or maybe you have rent from these real estate assets that might provide some type of different income, but reach out to the tax professional. And then two, what do you own from the NFT piece of real estate? Is that correct?
Yes, you said, well, do you actually own anything physically? How does it make money?
Let's see. I'm trying to unpack that the easiest way. Well, yes, you do own it because you own an NFT, and the NFT is the rights to that parcel. So when you think of like a deed, right? You have a deed that gives you the rights to that parcel of land and that ownership. So similar here, if you buy that NFT, you are the owner and have the ownership rights to that plot of land. Now, the best way to go about this, if it's a little bit confusing, is probably just to go to YouTube and type in sandbox real estate, and you might be able to see some videos on kind of how that looks, but you will own plots of land within the metaverse. So an example might be they have a conference center in the metaverse where you could hold events, or musicians can hold events in the future. think of like Zoom and these meetups as like just the first version or, first iteration. Eventually you may have a headset on or whatever, but concerts are going to be streamed live to those that want to attend physically and those across the world, but you're going to be more immersed into that experience. Like you might have the option to sit in row 1 in the metaverse while it's also playing live. Not sure we quite answer that, but also when it comes to the piece of land, you own the rights. And best way to put it is that you're going to own it within the metaverse. And so within that metaverse, you can build a house, structure, an office. You can set up your company's headquarters there.
Thanks, Joe.
It's hard.
But-
It's
I
hard to
know.
visualize, but I like to say, metaverse is already it's basically like interacting with a digital world. And if you think of when you go on Facebook, or, the most, right? You're already seeing people, you're seeing their videos, you're interacting. Eventually, you're going to have these headsets. Maybe we have these, eyepieces that go on where we're more immersed, but basically it'll become more of a reality.
Great. Yeah. So for more information, please reach out to Joe at his website there, robertventures.com. For any questions regarding, using your retirement funds such as IRAs and 401ks, reach out to me. Again, Ryan Fisher. My emails are fisher@camaplan.com. And I want to thank everybody for joining us today, especially you, Joe. Appreciate the information. Again, as usual, this is a big field with a lot of different ways to go down it. So your information is much appreciated. And thanks for being with us, Joe.
Thank you very much, Ryan.
All right.
Thank you,
Everybody have a
for
great
joining.
day.